site of the orbital Discovery, and the shuttle has cleared the tower. Discovery's core computers now have primary control of critical vehicle functions.
What's going on, guys? Alright, it is. Oh, I'm just a little bit early. Just a little bit early. Alright, so we got a new fun playlist today. If you want to sit here and kind of like jam out with us, you can either turn on the YouTube or I'm going to be posting the link for everybody. This is kind of, I just found this, so I'm kind of vibing on it right now. So I will put it in the Trade Talk chat if you want to listen to the mellow beats that I have going on. And then I will also put it over here into YouTube. How is everyone today? Give me one sec, YouTube. Just pulling everything up. Let's see. There you guys are. Alright, there is the music we're listening to at the very moment. So, But yeah, alright, so today we are going to be touching on a topic that I know some people have been very curious about, and I did get to talk about it in the group spaces last night. Let me try to turn this down just a teensy bit for the music, just so you guys can hear me. Anyone in YouTube, is this going okay? Can you guys hear me okay? Making sure it's not too loud for the music. But yeah, so today is going to be really talking about Wells Fargo and how that's all going down with their freezing the line of credit and everything, and just kind of my overall general take on it. Remedy, I've seen IJR and IWM. I did look into those, and those are iShares. So that's your Vanguards, and so I don't know, like I'm working on a tweet for it that I did see some people posting up about that on Twitter and everything, and I don't know, like I honestly don't see too much significance with it, them trading at the same, at the same time or whatever, in the same way, just because, I mean, they are from Vanguard, so I don't know, I'm not too convinced on it just yet, but like I said, I'm gonna do some research on it and I'll get a tweet out for it definitely here soon. Anyone in my Discord, if you guys do want to come up and talk, feel free to hit the button to do so, and I will bring you up if you guys want to go ahead and discuss with me. That's perfectly cool. It's kind of the fun thing about being in the Discord while I do the podcast, is that you do get to be a part of it. Yeah, so let's dive in. So I have taken the liberty to finding some fun little articles about what's kind of going on in the sense of like the freezing of credit lines and everything, and so let me switch over to, I'm hoping I've done this right. If not, well, here we go. Alright, there we go. Yay, we did it. Okay, so I have taken the liberty of finding some really interesting articles about this, and for everyone in Discord, I will go ahead and post these links for you. I'm not 100% sure why Wall Street Journal is, oh, there's the ads. Okay. Alright, so this is going to be Trade Talk. So here are the links for people in Discord. You guys can go through and kind of read through these. Follow along if you want to. But yeah, we're just going to kind of fly through these while I'm on here today. But if you know me, I like patterns, right? I like seeing what happens in reoccurring situations, and so what I've done is tried to see what we're looking at in the sense of 08 and now, right? Because it's what we keep hearing, like we're going back to 08, and guys, it's becoming more prevalent that we never left 08, right? We only kind of kicked the can a little bit, and here we are still sitting with the same situations and same problems, okay? And so what ended up happening, and this was published May 15th, 2008, bank freezes your line of credit. They started doing this with home equity lines, no matter how your credit rating was or anything like that. And the median condo prices were jumping up 13.2%, and it is astronomically asinine. It is just asinine about how things are starting to rhyme. They're not repeating. I won't say they're repeating or anything, but they're definitely rhyming in the sense that we're seeing the exact same things, right? And so, we've talked about numerous times how real estate prices are escalating and increasing at a drastic rate, and people are paying 20, 30, 40% over the asking price, and now we're starting to see these lines of credit also getting frozen. So this is just one article from Wall Street Journal. Forbes also wrote about it. This is from 2010. They touched on it about the 08 time frame. In 2010, we saw it again. And an economic downturn dealing with the macroeconomic pressures is bad enough, but financial institutions add to their woes, experts say, by refusing to provide capital to worthy businesses because they fear their lenders will also cut back. In the end, banks create a credit shortage that extends the crisis and delays recovery. And so why this is bad, and we've talked about businesses being in a jam too with the whole situation that's going on in the economy and everything with COVID, and the oversupplying of money at one point, and now they're drawing it back, and people aren't going to work and they can't find employees and everything. And why that's problematic is if businesses can't make money, people, they're not going to have enough people, you know, they're not going to be able to hire people, they're not going to be able to pay people to work, and that leads to less people buying goods and services, being able to afford their rent, their mortgage payments, buying cars, and that just kind of collapses the economy just from that standpoint alone. And so they're, you know, 2010, they were limiting people, institutions on how they could borrow and whatnot. And so we saw it with 2010. We know what happened in 2010. This one from Pittsburgh Post. This was written in '08 as well, talking about the lines of credit, the housing equity lines, just being frozen, and how we know it. We know it happens to where if people don't have the extra liquidity for an oops or an emergency or anything like that, it can crumble somebody. It can really crumble somebody. So it's just something to be aware of, and the fact that we're seeing like Wells Fargo and whatnot be the ones to pull it down is, an interesting facet. So I'm waiting to see if JP Morgan or Morgan Stanley or any of the other big institutions start doing the same thing. So yeah, and then we have, like, I've been reading the financial stability report. This is what I do on my free time, guys. And I think it was page 37. Let me see. Page 30, nope, that's 31. 35, 36, 37. Alright, so this is kind of going over, and I'm trying to understand it all. I'm still learning a lot of these kinds of words and everything, so if anybody out there can actually fully understand this, I will totally take you up on the help. Do you want the music playing in the background on YouTube? Yes, I do. I wanted it, since I'm the only one up here talking, so that's why I kind of have the music playing in the background. I'm bleeding it over from Twitch, because when I'm by myself, I kind of have to have something to keep pace in my brain. So it's just kind of helping with that, honestly. But as we can see, so this is from May of 2021, so this year. The leverage in the financial sector. We're looking at total assets and the growth, average annual growth from 97 to the fourth quarter of 2020. So you're just kind of able to compare and contrast to what's going on. Outstanding billions. So the banks and credit unions' total assets is and these are in billions of dollars. So 23, billion. Mutual funds at 19. So we are actually seeing that over leveraging. Now, over leveraging happens from what I understand from my own personal understanding of how this works is that in a time of crisis, not so much collapse or anything like that, but in a time of financial crisis and uncertainty, I guess I should say, the banks will leverage and slightly over leverage themselves to kind of protect themselves. And it's a naturally occurring thing, so it's not something that we need to completely freak out about on any given circumstance. Like, it is natural, from what I'm finding, but they are getting to a point where it's getting a little bit obscene, and this wasn't the case when I first talked about this and being, pretty confident in the banks. I was like, maybe they're not going to be too bad. Maybe they'll be okay. But guys, they have no idea what the crap they are doing, and that should probably be a cause for concern, right? So this is why this ties in. So this is the next thing I wanted to talk about was our debt ceiling. Okay, and for those that don't know, go away. Those that don't know, we, if you haven't been paying attention, we are in a lot of debt as a nation, right? Like, and it's all around the world. Every country is in debt to somebody, and it's just craziness. But we do have to evaluate our debt ceiling and our debt limits and everything, and our elected officials are taking their sweet ass time doing so. And what happens is, if we cannot come to an agreement, we have our Democrats and Republicans. This is the first time having to do this with our new elected president and all of our new senators and everything in Congress. So we're getting ready to see, like, are they going to pull this off? Which hopefully they do. Hopefully they really do, because found this article. I've watched numerous videos on this. I've now read way too much into it, and I'm about to just go up to Congress and be like, please put me in, coach. Like, I'm ready. Like, we need to fix this, because the super egos that are going on in our government is going to kill us. Like, it is just going to kill us as a nation, because I don't like you, and you don't like me, and we're not going to agree on this, even though it's better for the country for us to get this shit done, right? And that's the end thing right here, right? They just need to make sure that what they're doing is best for the country instead of what's better for their pockets, and that's all I'll say about that. But anyway, so they're trying to figure out the national debt limit suspension, is because it's set to expire at the end of July, and then they go on to recess. So if they don't, then we look at government shutdowns, and we look at like this is saying that they will force the U.S. Treasury to default, and so if we default on our loans and our debts, we start drawing money out of the Federal Reserve to have to try to pay that, and then you figure we also have the Federal Reserve trying to watch what's going on in the stock market. We've had them, also looking at, Biden and his, and Congress's $6 trillion bill that they're trying to pass. And guys, we have so much debt right now that they have no idea what to do, right? Like, where is all this money coming from? Because yeah, our Federal Reserve has basically been going burr for a year and a half, and we also, if you factor in the MOAS, it's going to go burr for even longer. Like, we're in a very precarious situation with everything going on, and I feel like there aren't enough people screaming at the top of their lungs going, what the hell are you trying to do to us? Because this is not good. Like, so, you figure you also have the Fed coin that they're, everyone's been talking about, and that's, the federal digital currency or whatever, because, the USD, is not holding its own right now, and it is, deflating in value as we're seeing inflation and costs and everything, and, that's making our country a little bit weaker, and that's unfortunate, because you have the USD as the reserve currency of the world. A lot of countries use the USD as a secondary currency, and if the secondary currency goes down in the world, then you're looking at the rest of the world kind of going down too, and it's exactly what happened with 1929 and 2008. The US goes down, we take everybody down with us. Well, I mean, how many more times is this world going to let that happen? How many times are these other countries going to be like, okay, yeah, we're going to keep following the United States and their economies? They seem safe. They seem secure. Are you kidding? Are you kidding right now? Because right now we're that very thin thread is about to snap, and so I'm hoping, given how we saw all last year how Congress and everyone, went about trying to file bills and do budgets and all this other craziness, like, I don't know, like, I'm keeping my eye on them, but I'm really hopeful that they can get this done by the end of July. Like, time's ticking by, and then we'll see, right? I mean, it's kind of a wait and see game, and that's the basics of today. What I wanted to definitely talk on with you guys is just how, the bank freezing lines of credit, how that plays into the Federal Reserve having to basically become, and the government becoming the new lender. And, well, our government can't do it. Our government literally cannot afford to be a lender. That's not their whole purpose. The government was not designed to be the, the piggy bank, essentially. Like, that's not our savings account. That's not how that works. And it's crazy that we've kind of resorted to that idea of being so reliant on the government that people need to be bailed out, or entities need to be bailed out constantly. And yes, I understand COVID. COVID happened, and it's a very unfortunate thing, and it destroyed the world. It destroyed people's lives, literally. And we have to be able to be a strong nation and pick up and start doing our work, right? Like, that is literally what we need to be doing, whether that is getting out and telling people what's going on, getting the word out and saying, hey guys, we need to step up, right? We need to start bringing awareness to what's going on in our government and what's going on in, the stock market, the real estate market, what's going on with crypto and whatnot. So it's becoming a very dire situation in the sense that people need to be aware, because at the end of the day, I don't know if people are fully capable of grasping it, right? And it needs to be broken down into a sense that it is easy to understand. So I will open it up for questions for either YouTube or Discord if you guys want to chit chat or anything like that. I'm more than welcoming to discuss what's going on. But we also trying to think. I'm gonna be doing some more like small videos today. I was just kind of taking the day off because it was just kind of it was just a day. Let's just put it that way. But I do want to start doing some more little podcasts here and there throughout the day, just kind of snippets, and there's a surprise in it for you guys. But any DD that you guys are finding, I'm going to put this message out there. If there's any DD that you're finding, whether it's from Supersonics, GME, AMC, BullHouse, so any good information that you guys are finding, send it my way. Send it my way, and I will definitely go over it. I'm going to get it out there on the channel as much as I can. So that we can bring awareness, and that's kind of it also kind of ties into my whole idea of trying to teach everybody how to find good information and reliable sources. Now if you guys start sending me stuff from Wikipedia or anything like that, I'm gonna have to smack all of you, because Wikipedia is not a reliable source, and I need this to stop because I have seen so many people. I understand the meme idea of Wikipedia sending me Ken Griffin's updated Wikipedia page, but I'm gonna need you guys to stop sending me pages that are Wikipedia for definitions. Like Investopedia is a phenomenal site for investing definitions and everything. Heck, Webster's always, if you guys are looking for definitions, great source. But yeah, I've had at least a dozen Wikipedia sites sent to me. Please don't do that. Just we're gonna take this college level, and that is not a reliable source. But yeah, with that said, Wikipedia says MOAS will be yesterday. Yeah, see, exactly. Everything from Charlie is beyond interesting. Oh yes. I've actually been introduced to Charlie, and it's fascinating. I'm thoroughly enjoying the videos and everything. But yeah, so I'm trying to think, what else do we have for the day? Oh, so yeah, I might have talked through that a lot faster than I should have. I am so sorry, guys. Let's see. So we also could talk about, if there's anything you guys want to talk about, you just definitely pop it up there. Do you think we need to see liquidity crunch first before we MOAS? It's a good question. We need to, there has to be liquidity. Let me think about how to answer this one. So they're gonna have to liquidate their own portfolios, right? The ones that have to cover the shorts, and it's not just Citadel. I need people to understand that it's not just Citadel that has a short position. It's not just them. There's numerous companies that are predatorily shorting institutions, right? And we will, in my opinion, what I've studied and what I've read, we will, the crypto sell-off. We're seeing that crypto sell-off that I called out in like January, February. If someone can remember back that far, I said it. I was like, we're going to see crypto sell-off. We're going to see crypto go down. And this was, they thought I was nuts. Like, crypto was like flying, and it was going like Bitcoin was at 50,000, 60,000. I was like, no, guys, it's going to go down. And I was sitting at 32,000, I think, something. But we're going to see, and then tech. Like, we're starting to see tech kind of come down too. And the bigger, the so quote-unquote safe, I think we're going to start seeing them pulling their liquidity from that. And so that way they'll have to have that to start covering, if that makes sense. Alright, we got stuff in here. One word, lobbyist. Yes. College paper using Wikipedia. I remember hearing about that. Yeah, don't do that. Do not use Wikipedia as a source, guys. Tsunami, basically like a tsunami. Some use that as a reference before. That's exactly it. So I've referenced this as the case that, GME, AMC, any of the shorted stocks are kind of like the synthetic CDOs, the CDO situation of 08, right? And we're seeing that throughout the whole market. Half the market, this is something else I discussed in the space last night, that half the market is closed, okay, or is shorted. Sorry, it's not closed. I mean, it is closed, but is shorted right now. And this is where I'm gonna get some flack. But my Discord people, they've heard me say this a few times, but I need you guys to do some homework, okay? I really want you guys to do some homework, and I'm gonna be tweeting this out too, and so you guys can definitely fact check me and everything. But figure out the price tag, the ape sentiment price tag, and I want you guys to actually do these numbers at some point. It gets terrifying, right? It is what's going on and what the apes want and how this all plays out. It's terrifying. And you have, at one point I did the numbers up and it was just the free float. It was literally just the number of shares that are supposed to be out, the number of shares that the companies have released for just AMC, just GameStop. And if you take the ape sentiment numbers as a price tag, you're looking at like 300 some odd trillion dollars for AMC, and you know, like $1 to $2 quadrillion for GameStop. I'm freaking out over a $6 trillion bill that they want to pass, and we're talking 300 some odd trillion just for AMC buyout, and a 1 to 2 quadrillion buyout for just GameStop. And so that's what I need you guys, and those are just two stocks. Like I said, you have Naked, you have you have Naked and BlackBerry and Meta and Clove, like all these. I mean, the SPY has shorts on it. All these other companies, right? So you guys have to understand that there is going to be some major hurt in this, and those assets have to come from somewhere. Shorts must understand infinite losses. Yeah, right? So I just I want you guys to embrace that, right? I want you guys to start doing those numbers and actually look at, you know, this is why the BullHouse exists. We look at broad market, we look at everything, right? And we look at the whole market that's being shorted, and it's baffling because once margin calls start, they won't stop. I mean, it is definitely a trickle down thing. I can actually show you guys something of this. So I actually did some DD on this. I don't know if anybody actually paid attention to it or not, that I posted up on BullHouse. And I will post the link and share screens and everything. So just give me 1 second. I wasn't actually anticipating going over this today, but we have time. It's amazing when I'm up here by myself. I have time for so much to talk about. Come on, refresh here. Thank you. Remedy, that's actually, it's not exactly true that it's not our problem, because at the end of the day, we know that they're going to get bailed out. You have to know that. You would be completely just oblivious to how this world works if you thought that this is not so much for Super Stonk. This isn't for Super Stonk. I am very close with their mods and everything, and I try to be very respectful to how they work and what they post. So this doesn't pertain to Super Stonk's GME stuff, so I don't post it on there. That's why we have our BullHouse subreddit, and so that we can post our broad market aspects. And so, but yeah, I need you guys to understand that whatever's going on in the market at this present moment, it concerns us. It very much does concern us. Give me 1 second. I will share my screen. So yeah, so this is the DD I did just recently. Pertaining to margin calls, and I'm not going to go through it all. I want you guys to be able to go hang on. They have been destroying this country before GME. Oh yeah, they have been. They have been, and we've been paying for it. We paid for it for, we paid for it in 1929, we paid for it in 08, we paid for it in 10, 12, 1980s. We've paid for it. So this is no different. This really is no different for what's going on, and that's why you guys need to stay aware, right? yeah, exactly what a margin call is. Occurs when the value of an investor's margin account falls below the broker's required amount. An investor's margin account contains securities bought with borrowed money, typically a combination of the investor's own money and money borrowed from the investor's broker. Margin call refers specifically to a broker's demand that an investor deposit additional money or securities into the account that is brought up to a minimum value, known as the maintenance margin. Margin call is usually an indicator that one or more of the securities held in the margin account has decreased in value. When a margin call occurs, the investor must choose to either deposit more money in the account or sell some of its assets held in their account. So, by definition, like, yeah, as long as, my argument in this is that if we want those margin calls to happen, we can't just be focusing on two stocks. Which, I mean, from finding out, almost all of the shorts have their own little populations, which is pretty cool to see. So yeah, we're getting them on all fronts. So I think that's exactly what happened with Archegos, is that there was a small little group that figured out with Discovery and Viacom that got a margin called, right? Their low value or their value that they had to hit was a little bit closer than they cared for, and then these people anyone that was invested in Discovery and Viacom just kind of pushed them over edge, which I think was pretty cool. I mean, it's not cool that Archegos went under, because at the end of the day, guys, there are some innocent people in all this. So you have to remember that there are innocent people, secretaries, and people that have no idea what's going on, in the sense that of the short selling and everything. But just keep that in mind, right? There are innocent people and people that have been invested into like Archegos or Citadel or anything like that. There are people that are innocent in all of this that are going to get hurt. That's my bleeding heart. That's my warning out for everybody. Like, people are going to get hurt in this, and they have no fault in it. Like, they weren't involved, right? So that is kind of a thing to remember too. Whenever we're saying, F the hedgies and screw them and blah blah blah. Like, there are going to be people that are completely getting hurt in all this. So the charts that I found are basically showing bull runs and trading volumes and things like that. You guys can, like I said, you guys are gonna have to read through this. I don't want to run through it today. This is not the day to actually do my whole video on this. But we have margin debt skyrocketing. It's higher than the dot-com bubble. It's higher than '08. Like, we're getting closer to those numbers, and it's actually the highest it's ever been. So I did provide some of the different stats and everything on the charts and everything to kind of show how bad it's getting, right? And God, guys, if you're buying stocks on margin, I would advise to stop. Honestly, like, that's my only advice. Like, use a cash account. Don't use margin. Margin right now is just setting yourself up for some craziness along the lines. But yeah, that's kind of my argument, right? There's margin calls happen in like 1929, right? It was a pretty unregulated market, and buying a stock with as little as 10% of the price was quite common, right? They actually had to put these regulations, these margin regulations and everything into effect after the Great Depression. Like, that's when the Federal Reserve went into place, and they really just kind of started honing in on the retail. Like, so you can kind of thank the Great Depression for all the rules and regulations that we have right now that they've been extorting and exploiting since then, right? So it's just, the entire industry is just a mess, and this is what we need to be, showing as much as we can, and that's why we do all of these, all this DD. Like, you have so many people doing DD and everything, because we're trying to show, like, it wasn't the retail investor. It was not our fault, because I guarantee you at the end of all this is said and done, they're going to say, oh, the retail investor screwed up the market. No, not at all. Yeah, our small business was also declined for PPP. So, yeah, I know it's interesting. Citadel are saying margin equals day trading only, dangerous otherwise. Yeah, 100%, 100%. Citadel, do you want to come up here and talk? We got 30 minutes on our podcast today. If Citadel or Existent wants to come up and talk about margin calls or anything like that, or anything that you guys are seeing in the market today, you guys can definitely have the mic if you want it. Hedge fund. Oh, I have no mercy. Yeah, well, have a little bit of mercy, because this is my big thing right now, guys, is that if you have no mercy, you're no different than them, right? This is the difference, that the ape community, I guess you could say, is different than the hedge funds, because we actually have compassion. We have the human aspect still. We're not cold. We're not, completely turned off from that aspect of life. And so I think that's where we can definitely set ourselves apart still, and have mercy on the people that aren't involved in it, right? That's the biggest difference. I mean, I could be totally stupid and wrong in this, and that's fine. You can say that, but that's just my feeling on it. Is that that's the thing I like about how our little movement, or whatever you want to say, is going. My entire millennial generation has been handicapped by these guys. I'm a millennial too. Trust me, Remedy. I understand. 100%. I graduated high school in '08. I understand the handicap that we've had 100%. Yeah, let's see, graduated in '08. I moved out in 10, got my own place and everything, and then 2012 was one of the roughest years of my life. My husband and I were almost homeless. We went a couple weeks without electricity. We barely had food to eat. Like, we lost our jobs and everything. Like, 2012 was very rough. And I mean, the fact that we've really picked up and we've done very well for ourselves. Like, we vowed to never be that down again. Um, and it's unfortunate, because I'm starting to hear stories of exactly what I went through in 12, people are starting to go through now. And that makes me sick, because I cannot fathom that we have this much technology, this much advancement, and this much ability to help our communities, that people are still having these problems. And it makes me mad. It really does. Could you go over the 300 trillion AMC number you referenced? What was that related to, and how we get to that number? Yeah, give me one sec. So so if you take the amount of shares that AMC is supposed to have out, what is it, like 500 million, 501 million, or something crazy like that, and you take, okay, let me get my calculator out. So you have 500. We'll just make it easy. 500 million shares that are out right now, and if they have to, and this is again not including any synthetics. This is not including any failure to delivers. This is not considering any shorts. This is just the float. If they have to buy the float one time, right? That's what we're talking. I've heard people talk that, they have to buy it 4, 6, 10, 14 times over. But they just have to buy the float just one time. And you take the ape sentimental number of, you know what, we'll do the high. The ape sentimental high value of 500,000 a share. Let's see, we're looking at, million, billion. Okay, so that's that would be $250 trillion to buy it one time. Okay, I think I was doing it at the, because I saw someone say 750, maybe that's what I did. But anyway, $250 trillion for the ape sentimental value of 500 million shares. 500 million shares of AMC bought out at 500,000. Okay, so maybe it's the 501. Let me see. Doing it just real quick. 1 million times 500. Nope, that doesn't work. But anyway, so yeah, okay, $250 trillion. Close enough, right? I mean, that's craziness. So yeah, literally take just the float. just the float. But whatever the amount of shares that AMC has released up to this point, so it should be like 501 million shares, times it by the ape sentimental numbers. So then you also take, you can do GameStop. What is theirs? Like 70, 80 million? I can't remember now. We'll do 80 million. And I believe their ape sentimental number is 25 million at this point. It could be higher. I've lost track. And you're looking at, let's see, million, billion, trillion. That's 2 quadrillion right there. So those are your numbers. Those are the high ape sentimental numbers of what's going on right now, price tags, and that's just what the float is. That's just one time. That's buying it one time. See, I don't know, and that's where I'm gonna tweet it out. Or maybe if you guys want to, I can try to do like a little whiteboard dictation or something, just to kind of show, right? But just this is what we're looking at for our market. And what they're going to have to be covering and what the apes are asking for. So I might try to do that at some point. But just so you guys kind of be prepared and kind of figure out, like, okay, maybe they're taking it from this tech area, maybe they're taking it from that tech area, maybe they bottom out crypto or something. Because at the end of the day, it's a debt owed, right? It's a debt owed. If nobody's selling, well, they still have to buy it. And so it gets really interesting to see where it's going to be. The government is absolutely drooling at the capital gains earnings, right? Oh yeah, 100%. 100%. They know that they can make big taxes off of us having to pay capital gains, or not even it's not even capital gains, because I think capital gains is after a year of holding. It'd be like our regular tax bracket that we'd have to pay into. So yeah, that's basically that. I mean, you guys can sit there and play around with the numbers, but I do want you guys to start doing that. That's your homework, is figuring out the price tag. What is the price tag of AMC and GME as a whole? And I know everyone's not going to be selling at the very top. Not everyone's going to do that. Let's be real here. People are either going to sell too early or they're going to miss it completely, which is perfectly fine. I mean, it's perfectly fine, and this is where I've touched on, making your own personal floor, and I'll cover this one more time for anyone that hasn't heard this before. But you have to set your own personal floor. What the hell is a personal floor? Well, guys, I'm so happy you're asking this question because it's so important. But basically, so what you're gonna do, more on the extreme end, you think, I don't know. I honestly don't know. It's one of those things that I don't rule anything out anymore. I really don't. But yeah, so your personal floor. So this will help you guys sleep a little bit easier at night once this starts popping off, right? So what you're gonna do, take your debts that you have, any debt that you have, your student loans, your car, your house, if you want to buy a new house, buy a new car, anything like that, whatever you have debt-wise, right? Anything that you need to pay off or you want to buy and have paid off, because at the end of the day, having that debt secured and paid off and you don't owe it, then it kind of sets you up, right? And I know, no, the MOS will not be one day then. So once you have that number, your debts and anything that you need to pay off right now, add in, that's when you can add in the things that you want. Maybe you want an extra car or a toy, some kind of fun toy, a motorcycle, a boat, a camper, whatever you think you might want. A fun thing for your adventures or anything like that, anything fun. And then you're going to factor in a yearly salary for the next 10, 20, 30 years, however long, that you need. And remember, you can always invest. You can always reinvest. You don't have to be greedy. You don't have to be, totally you can, if you want to be greedy, be greedy. But if you don't want to be greedy, take the 10, 15 year and start day trading or, getting into investing and things like that. And that way you can build your wealth, right? Or buying real estate, because guess what, guys, that real estate market's going to be hot here soon with foreclosures, if we're looking at the bubble correctly. But yeah, so you take your debts and your new toys and then your yearly salary, whether it's 75,000, 150,000, whatever, for however many years, right? Add that all together. That is now your total amount of money that you're looking for this MOAS. That is your number. Take your total number, divide it by the number of shares that you have. Now you have your own floor price. That is your own individual floor price. Yeah, remember to take taxes out. Remember to take taxes out. Yes, thank you for existent for adding that in and putting the floor price or the taxes in there. Yeah, California. See, this is why we live in Florida. Florida, you don't have to do that. We have very, we just pay federal taxes. But anyway, and there's trusts and things that you can invest into, and there's that's a full another video at one point. But anyway, you now have your own personal floor price, and I guarantee you, it is less than what the Ape Sentimental price is. I can guarantee that. Almost. Well, I can't guarantee it. I can almost guarantee it. But based on just those fundamentals, that fundamental aspect of how you need to live and what you're looking for, you now have what your price, probably your floor. And remember that the floor is on the way down. That's the bottom number, the bottom dollar number that you're going to sell on the way down, not on the way up. So once it hits on the way up, you sit back, you rest easy saying, okay, now my number that I need has hit. It's going to hit again. It's going to hit again. Floor is lava. You don't want to hit it again, but it'll hit again. So once it's already past it, you sit back and you smile all the way up to that moon and say, okay, well, now it's 2 times that, it's 3 times that. Now you've gotten 2 generations, 3 generations, or whatever it is, and you're set. You're sitting there smiling, thinking like, okay, I've already done the numbers in my head. I already had a plan, what I needed, and everything is just extra, if that makes sense, guys. Citadel, ladies up here. Hey guys.
Good evening.
You guys finally get tired of me talking? Guys, Citadel. Okay, for those that don't know, Citadel, I'm trying, buddy. Like, I'm trying to get you not to be a shill on Twitter anymore, because I'm so sad that people think you are. Citadel Air is part of the BullHouse. He is part of our team and is a good friend. And I want you guys, if you guys can, go follow him on Twitter. He has some pretty hilarious things that he's been posting with GIFs and videos and whatnots. And hopefully one day he's going to start, posting those up on the BullHouse as a little fun playlist for you guys. But yeah, so you guys can totally take the stage.
Thank you kindly. I did not fly in to take the stage, just to show some love, show some support. And for the record, I think today I was only called a shill 7 times, despite not posting anything provocative.
Shoot. Hey, maybe the word's finally getting out.
Perhaps, but you watch. Come tomorrow, I'll have a Twitter DM box full of shill material, even though I've just been posting something that's factually accurate and transparent and readily available.
And what have you been posting today?
Today, I actually don't think I posted much of anything today. It was in regards to response to comments of there was some FUD. I felt like I was on FUD patrol lately. Just by not necessarily correcting people, but kind of citing sources, as a counter argument. And that's usually where I get the hate mail. If I say anything outside of an echo chamber of a certain forum, I'm instantly a shell, and etc.
Oh no, I've had that too. Don't worry.
For the chorus.
I have Kenna, the one that has been here since January, that you all know, has been called a shill, and I'm like, okay, that hurt. Which I think is funny.
It's okay. I just take it out by working on my next, Kenny G moment of glory for pre-market. So I'll have something tomorrow.
Can we talk about the fact that you and the whatever Twitter profile that is always by each other?
There's two. I have two. My boss has 2 Twitter accounts. There's Ken Griffin, Thousandaire, who is at saturation level 140%. He's very blue and very kind of tan and orange. In response to everyone changing their their profile pictures to grayscale or black, like to support GME. We decided to take him the other direction and oversaturate his image 140%. And then there's Ken, I think it's Ken Griffin's Mayo is the other the other profile, who's equally as comedic.
That's so funny. Like I saw your tweet earlier that was like, why are we always next to each other in the spaces or
It's
whatever?
it's so weird. Like I'll join a space, and then if he's on, I'll send him a link. Be like, hey, like come listen to this. It's interesting. Or if I'm gonna speak somewhere, and if we're just kind of like lurking, it puts it without fail every time it puts us right next to each other, and I just found it rather amusing. But
Hey, Ken, there's a YouTube question you
Yeah,
may want to
I
look at.
just saw it. How do you know when you're at the peak and on the way down? All right, so no one can tell you for certain. We can all just kind of give you our guess because, well, this has never happened before in this sense. Like, Volkswagen was, it was, if you actually zoom into it, it was a 3-day event. The peak was actually for like 3 days, right? And so, um, and my philosophy, what I believe, not financial advice, not anything like that, but just how I'm viewing this, it'll kind of, we all know what trading sideways is, right? We all know what that means now. And barcoding. Those are the two main things that I'm personally looking for, is when we start trading sideways at some stupid astronomical number that shouldn't be there. When we start trading sideways, because that means we've met a level of resistance on the low end, and we've met a level of resistance at the high end. So that means it won't go any higher or lower. And so when I see a couple days of that, that's when I'm going to say, okay, I think we're at the top, right? And then you're kind of going to look for like a 2-day red bar, right? Where it's actually dropped 2 days. And I think that'll be a good indicator that we're going down. Now it can pop back up after those 2 days, see a green candle, but then we might see another red candle. So that's kind of the pattern I'm looking for the way down, is 2 red, a green, and another red, right? So that's kind of what I'm looking for. If anyone else wants to kind of comment what they're looking for, that would be great.
I think I tend to agree, and like Kenna said earlier, kind of figure out where your floor is. And once you're above your floor, it's probably all gravy. If you figured out, what you want, and we're 2 times, 3 times, 20 times above the floor, then it's when you feel like it's starting to fall down too much, and you're still 15 times above your floor. That's probably your downturn. Probably your way down.
Yep, I was taking a drink. I haven't had a drink yet. Yeah, so that's pretty much what we're looking at, right? And we can kind of, like, that consolidation period, right? It's just going to be a consolidation. And believe it or not, you can actually chart AMC and GameStop still. We can still chart it. It's a little bit finicky and a little unpredictable at times, but you can still actually chart it and use TA while this is still going on. So like with me doing TA, and if anyone else has done any of it that wants to say anything, like I'm looking at like a breakout around the 22nd, 23rd. That's kind of what I have in my head. So that's why like today, like it was red, and I'm going, well, okay, that's kind of predictable based on my TA that I've done. So that's where I'm not sweating. I'm not sweating at all right now in these red days because it fits into my analysis that I've done. And so it would be like, I've had a few messages that are like, oh my gosh, today's so red. And I'm like, yeah, it's okay. It's okay, right? Because at the end of the day, we know what we know, and we know what has to be done, and we know how it's going to happen in a sense that, okay, once we start seeing the volume tick back up and everything else, we'll see a breakout. Now, whether or not it's the MOAS, that's up to just, to fate and everything, but once we start seeing these breakouts more often, because we've had February, that was a long consolidation period. After March or May, that was a long consolidation period, and I think we're seeing that again now with July. We're having this long consolidation period. People are getting a little antsy. So I'm not too concerned with what we're seeing right now because it's a pattern, right? We see these huge run-ups and then we consolidate for a little bit, and we see another big run-up and then we see a consolidation period. So just gotta be patient a little bit with it.
I think you're absolutely right. My best advice, which is actually not financial in nature at all, and genuinely isn't, I tell people that my investing mentality is that of being clinically detached, which kind of sounds odd, but basically I'm devoid of emotion when trading, because that's often priced in or factored in, especially if it's a certain hedge fund which weighs heavily on their quantitative their quants to do social sentiment analysis and predict what not only apes but what humans are going to do in the market next, and they're pretty good at predicting it if you're following base emotions. So clinical detachment is worked well for me in general.
And that also falls along the lines like not playing with money that you can't afford to lose, right? I cannot emphasize that enough. Like I hear people that are taking out second mortgages or selling vehicles or just selling their livelihood for this, and while we all want this thing to pop off tomorrow, it could be next year. It could be another year from now, right? Like we don't know. We just don't know when it's going to happen, and so I don't want people to be struggling for a year and a half, 2 years for a MOAS. Like it took, how long was Volkswagen? 3 years or something like that. Newegg took like 6 months to a year or something. We just don't know. And so I wanted you guys to err on the side of caution of, don't play with money that you can't afford to lose, because that makes it to where you're not stressed. Like you're not, emotionally attached to it all, and you can just look at the red days and be like, okay. But at the same time, most of us that have been in since January, February, these red days are still what, 8 times what our average would have been back then. So, I still look at AMC. I'm like, okay, it's still green for me. Cool. Now, if it starts hitting red, if it hits red for me, then I'm gonna be like, okay, this is enough. Like something needs to happen now, because if it drops back to like that $8-9 range, there is some major bullshit going on. Let's face that. Do we have any other questions? We're kind of coming up on the end of this and everything, so do we have any questions? Haven't had a red day since $10. Don't care what the daily charts say. Yes, pandemonium. That's what I'm saying. Is there a point or something that will happen that will force the hedgies to bite the bullet and settle their shorts? Sorry, noob question, but my understanding of shorts is still pretty elementary. No, so yeah, no, Hoosier Ape, that's a great question. So, Citadel or Existent, or anyone, correct me if I'm wrong, the only thing that would force the hedgies to actually cover their shorts would be a margin call, correct? That's the only thing, right?
Sorry, I'm thinking.
That's the only thing I can think of that would force them to have to cover, is a margin call.
There are some outlying circumstances that could cause it, but it's not instant, and it would end up in probably 6, 12, 18 months of litigation before it even became close to happening, because the people that are short would be suing to stop it.
Yeah, I think realistically, margin calls is likely the most realistic scenario to force them to buy.
And at the end of the day, if the price goes up in whichever security, AMC, GME, or whichever one is potentially squeezed, the people that are short, the hedge funds, the market makers, etc., they all have liquidity and maintenance margin requirements, just like you and I do, just a whole different level. So at a certain point, that's how that cascade or catastrophic event, that starts to hit multiple institutions begins.
Thank you, guys. Thank you. Yeah, so I mean, we're looking mainly for those margin calls, and that's why I've been trying to really do some good deep dives on it. Hey, John, what's going on? I don't know. Like, it's the retail investors. We're up against a beast that's been going on and on for far too long, and they've only, we're now playing in their playfield, their playground, right? And I don't think they like it too much. And we're actually, ladies mentioned it to me and to the Discord a few times that, her friend that works in the industry, like, we do more deep dives, we gather more information than people that are getting paid to do this, right? So, I mean, that's where I say, like, knowledge is power, and we can use that to say, hey, there's something going on, this isn't good, and it needs changed. And so this is where it's like, I love that people, tag the SEC and the DTC and, any government officials saying, what the hell? Because now that people are waking up, we are pissed, for lack of a better word, we're pissed off and seeing the unfair advantage that they've had for all these years. We're not playing, we're just holding a stock. It's still playing their game. We're outsmarting them in a sense, but I mean we have to keep digging. This is where, like, people will say, oh, the DD's all done. No, the DD is not all done. Not even close for AMC and GME, because we keep finding new ways that they're shorting the stock, right? And it's through these random tokens that they've created. It's through, the dark pools that we've found. The ETFs, they have so many different ways of doing it, and we can't even touch half of them. What is the difference between a custodian, a depository service, and an investment bank, and what can they do with our stock? Citadel, existent. Anyone know that answer? Or anyone in the Discord, for that matter.
Those are really going to be just different ownership types of accounts. If you, like, a custodial account, for instance, would be something I would open for my kids, where I'm controlling the account entirely, but it's to their benefit. And so, what was the other? Where was that question? Over here.
It's a YouTube. Depository service, custodian, and investment banks, and what can they do with the stock?
Deposit and a service and investment bank, I can't answer. I don't know information there.
Big Mick, I'm gonna copy your question and I will try to find an answer for you. Is that cool? I'm gonna put it here in the Discord chat so I remember. Alright, I have it down and I will definitely look into it and I will try to have an answer for you. And the next podcast we have, I will call it out. So on Wednesday night at 10 p.m., I will have that answer for you. Cool? Someone hold me accountable to that so that I definitely remember. I don't think I have anything going on between now and then to forget, but
I will shoot you the exact answer when I get home. I'm in the car and I don't want to misspeak. I'm a little fuzzy. It's been a long day.
No
but I can
worries.
shoot you the answer when I get home.
Oh, shoot. Yeah, that's cool. And then one of us can tweet it out too. If you follow any of us on Twitter, we'll tweet it out too, so you can have that as soon as possible. Alright, do we have any other questions, comments? Does anybody in the Discord want to come up and say your piece about anything before we head off for the night? I see First Strike's in here. Hey, Tyson. Thanks for the live stream. Good night. Night, Remedy. Tyson's up here. What is your final words for the night before we head off?
Hi. Bye. Hi, everybody. I just got on, so I'm gonna go hang out with everybody and see what's going on, and I'll catch up with everybody later, I guess.
Sounds good. Alright guys, that will wrap it up for tonight's podcast. If you do want to continue the conversation, we usually do keep it going a little bit longer in the Discord. I might start a Twitter space tonight, just for anyone that's on Twitter. And you want to talk or anything like that, we might get one going tonight. I'm not sure yet at the present moment, but yeah, thanks for joining us everyone, and we will see you again.